a lot of our subscribers who are, small business owners, they essentially were utilizing ADP, for example. And at one point, there was like an integration with Plastique, which
Right.
basically allows you to pay any vendor using a credit card. So they'll basically send your vendor an ACH or a check, and they basically bill your credit card
That's right.
for it. So that solution was working well until it was removed from the ADP marketplace.
Right.
So a lot of small businesses also ran into that issue where maybe there's a shortfall in funding to, pay their employees. That's why I was like just going through searching for different companies, searching for different solutions that might be able to fill that void. And that's how I came across payroll several months ago. So I was very intrigued by the fact that your business model seems to cater specifically to funding that payroll gap. So a dedicated credit facility for payroll specifically, which, from my knowledge, there's nothing else comparable to that, at least from my understanding in the marketplace. Can you kind of walk us through in terms of like an ideal customer profile for payroll? What does that customer look like in terms of maybe size, number of employees, revenue, maybe industry? What does that kind of look like?
Yeah, absolutely. And you're right. Plastique is maybe the thing which is probably the closest thing to what we do. But like you said, it's no longer available on ADP's platform. So what we do is we like to position ourselves as a payroll assurance, right? So you have payroll coming up. Your cash flow may be inconsistent. It's going up and down. There are times you get large deposits in the bank, times you get less. And you just need a little bridge from cash flow to cash flow from one point to the next point, usually within a month, sometimes as short as a few days. So the ideal business profile is a business that knows they have those short-term cash flow gaps, perhaps frequently, but it's short-term. So you have either net 30, net 60, net 90 receivables. Maybe you're in healthcare, you're building insurance, and they have their payment terms. You're in staffing. You must pay your employees when they finish the work. You're only getting paid in 30 days. It can be manufacturing in any industry where you must lay out the money up front. You're only getting paid back later. But it's a short-term issue. It's a short-term cash flow problem. That's a business we can help. If you're looking for money because simply you're not generating enough revenue yet, or you have to purchase a ton of inventory and you only get the money back will take you a few months until you recover the funds, until you can complete the sales, we're not for you. It's any business that knows they have a short-term cash flow gap and they occasionally need that bridge, we will come in and bridge that gap. Typically, a business that in that type of, that would find themselves in those situations and that we fund are doing between $100,000 up to $1 million in revenue a month. We have businesses that do less than $100,000, but once that's getting too small, it's hard to qualify them. And usually once businesses are doing more than $1 million a month or greater, they'll usually have other solutions, perhaps a lot of credit with the bank or other things to back them up. But there's still exception. We actually funded somebody the other week that was doing $3 million in revenue. There are staffing agents running $1 million payroll more than once a month. But we funded them $200,000 at a time just to fill in that little gap they're waiting for. But in terms of industry, let's talk about industry a bit. We cover almost all industry. And that's because cash flow doesn't discriminate.
Right.
It's really there's no specific industry that deals with cash issues more than others. You'll find staffing, perhaps in healthcare, also similar because they have very high, human capital expense, where they'll have a bigger cash flow problem, but it's really across one.
Based off the, I guess, profile in terms of revenue, this would obviously be for more established businesses. But what is sort of the minimum threshold that payroll sets in terms of, okay, minimum number of employees, minimum monthly revenue?
So the minimum and the lowest begin is you must have a minimum of 5 employees, and each payroll must be a minimum of $5,000, and it must be at least 2 years in business.
To follow up with that in terms of underwriting, right? So you mentioned that typically it's going to be for businesses, let's say you're waiting on, let's say, receivables, whether that's a net 30, 60, or 90. As part of the underwriting process, do you sort of verify, okay, this particular business actually does have some type of receivable that's on the way or it's scheduled, but they just haven't received it yet?
Yeah, well, you see, that's an important point to make. And we need to differentiate between our product and, let's say, other receivable financing products. You have, factoring companies out there, invoice financing, and those companies help businesses in particular when it comes to receivables. You have a huge invoice, it can be $1 million or a few $1 million. You can get a factoring company that will either purchase the invoice or lend against it. That's invoice factoring, or have a few other terminologies. We don't look at that. We look at cash flow. We analyze 6 months of bank activity, and we want to see that there's consistent revenue coming in. Based off the historical revenue of the past 6 months, we will determine what we expect to continue coming in over the next few months. And then if we identify that cash flow gap, okay, we understand why you need a short-term fund, because there are times you have higher cash flow, times lower cash flow. Then we will fund that difference.